Hey, good evening traders. We are running a little bit later than normal. It's 20 to 10 here in the UK and the US will be coming to close in about 20 minutes before we start the new trading day here in the forex market. Today has been a typical Monday, not too much, but we're predominantly seeing movements in the risk markets. That's indexes, Aussie dollar, Kiwi. And then on the flip side, we are seeing a depreciation of the euro. We're going to leave the euro alone for now. A few of our recent videos have obviously been looking at potential GBP strength, with April being its most significant month of a calendar year based on seasonal patterns. But we're going to give pound a skip for now, and we're just going to take a look at some of the yen pairs. So this evening we're going to look at Aussie yen, Euro yen, CAD yen and Kiwi yen, and then we're also going to take a look at one of the indexes. We'll probably look at either the S&P or the NASDAQ, and then that'll be it for this evening. So looking at Aussie yen, we've seen this market move from 80, what is it, about 80.5 all the way up towards 94. So it's been a significant one directional move, but we know that everything that moves in one direction doesn't always move in one direction. Last week printed, you could call it a shooting star doji, but a clean rejection of the ascending trend line. We've got multiple rejections, 1, 2, 3, and then potentially the fourth. The movement into this has been very similar as we saw here. And as you can see, this market did consolidate for a number of weeks before we then started to retrace. Movement slightly different here, went straight in, gave a similar shooting star doji with an inside candle, and then we started to retrace from that key level. So we haven't got any signs yet of breaking down and seeing the market decline. Now, last week in our members channel, we did highlight that the move that we were seeing and that was present was more of a corrective retracement rather than a retracement that was likely to break down even further, and that's been cemented by the market breaking out to the upside. And you see this movement here, the way the market was moving. It wasn't very aggressive. It was more corrective. We've broken out to the upside, and then we were looking for either price to come back and test these highs, or maybe to just test the 93 even handle before we then start to see the market roll over. Now there's a couple of clues we can watch for. One would be seeing the market sort of break through this sort of trend line here. But ultimately what I want to look for is I want to see price get back below 90. Now if we look at this on a daily chart, oh sorry, let me just zoom out a little bit so we can see in a little bit more detail. There was our corrective movement. Now we're seeing price rally back up. It could form a double top and we could get a nice clean rejection at this area, but ultimately I want to see price pull back below this little zone here. When we get price pull back below here, we'll have seen a change in sentiment, change in cycle on the higher time frame. And then obviously the reason I'm looking for a bigger shift or a bigger change in sentiment is because this has been such a strong market. You can see here that Aussie's been the strongest and yen has been the weakest according to the daily chart. So it is, you know, when we're seeing this on our strength matrix, this is a prime sort of chart to be looking for a reversal, as is Kiwi and CAD. You can see those three markets all at the top of the strength meter and yen down at the bottom, definitely prime for a reversal setting up. And we are approaching that time of year where we could see indexes drop, and if indexes start to drop, that's all going to be correlated with watching bonds and yields, and if we do see them drop, we're going to see that money flow into the Japanese yen. So watching some of these key structural points like this one for price to get below could be a real nice cue sign to be looking to buy some yen strength. So let's take a look at euro yen. Euro yen is going to be very different to the other markets. So euro yen is different because although we're looking for some yen strength, we don't have any sort of clear resistance on this one right now. What we have is price broken out of this corrective pattern or this descending channel. We've broken out, we've pushed higher, And then if we just look at the current candles and the formation that's been printed, we see a doji, then we see basically a hanging man, then we get a strong exhaustive candle followed by buyers stepping in but failing to take out the high, and we're now approaching sort of a minor support level here. So if we drop down to the 4 hourly, you'll see the price is now testing what was old resistance here, and now we're forming a base. So I wouldn't be surprised if we have a little push up tomorrow, but I'll be looking for any break below sort of that 13460 area, and then we can look for a corrective move to trade that back down into sort of the 133s and maybe even lower, providing we see that yen strength coming in. Preferred charts outside of euro yen would be CAD yen and Kiwi yen, because they work with our strength meter, or strength matrix, as I'd like to call it. So the preference always lies with buying the weakest and selling the strongest. So you only buy the weakest when you're looking for a contrarian trade or reversal trade. A traditional sort of trend continuation would be buy the strongest, sell the weakest, and then we just look to combine that knowledge. So in this case, buying the weakest, which would be yen, and selling one of the strongest, which would be CAD. So we're looking at this price action here where we've seen multiple clean rejections of the upper ascending trend line. We've got a nice shooting star candle formation, but there's been nothing to sort of cement that the market is likely to pull back, whether that's going to come back into these highs here, or we're going to see the market decline back down into support trend line before we either make another push higher or we break lower. So again, it's just waiting and patience and being disciplined to see the setup that we require. So looking at this right now, very, very similar to Aussie yen, and it's bound to be similar because of the nature of this market, in essence, that we're looking at risk currencies. Rather than a channel, we've got a descending wedge or falling wedge pattern that formed, and we've broken out to the upside, and we're now pushing back up. But really we need to see price break through this support level here, and then I'll start contemplating looking to buy into some yen strength. As it stands right now, yen is too weak for me to contemplate buying it, which is why I need to see a little bit more confluence in the markets to warrant placing some yen buys. Last but not least, a very similar setup is on Kiwi yen. So if we go out to the weekly chart, you'll see here price has pushed up into the upper trend line. As we've seen, price has tested here, didn't quite make it here but very close, again tested here. We pierced through a major weekly level here at 84, and then this one was a much more bearish shooting star rejection at resistance, and now we're looking again for price to push back below that blue zone to then trade it back down into support, or maybe even the previous swing highs. It's all going to come down to how price reacts at the moment that we're looking to trade, and then it's down to management techniques to keep us in that trade. So again, as you can see, very, very similar to the Aussie yen chart and CAD yen. We've got this sort of channel structure that's been formed, that's been broken, but we need to confirm that move to the downside. We want to see it break the key support level around 84, and then we'll look for a correction to then trade and look for that yen strength. On the flip side, we want to make sure that we are seeing some sort of selling in indexes, or that yields have come up to a key structural area for us to then start looking for that movement. Now if we go over to the NASDAQ, we'll see the NASDAQ came into the 15,200 level previous week, which saw a nice rejection of this area. We sold off about 400 points, but today's seen a break of Friday's high, and we're pushing back up. But by the looks of price action, we're going to go and test 15.2 again. But my alerts are set down here as it currently stands. If we were to just measure from our low down here, so we'll call that X, to our high point up here, we'll call that A. We're looking at potential rejections in here of 38.2 or around the 61.8, and that ties in nicely with this little bit of structure here and here. So I'm not a seller of indexes, but I want to see price come down here, and then I'll look for the opportunity to get long from there, or similar here. want to see the market consolidate, give us some sort of corrective natured pattern before we look to get long. So 14.4 and 13.8, they're going to be my alerts, and that's where I'm looking to get long from. So guys, that's it for our video tonight. Hope you've enjoyed the content. If you did enjoy the content and the chart analysis, please give us a thumbs up, hit that like, share and subscribe button. The whole point of hitting subscribe is so that when we do publish a video, it goes straight to your inbox and you don't have to search for any of our content. On that note, we'll see you tomorrow. Have a good evening and stay disciplined. Bye bye.